guys, it's Joshua. So what's the one thing that's better than winning the lottery? It's feeling like £1 million after you've finally submitted your tax return. Just imagine plonking yourself in front of the sofa and watching a bit of Netflix, having done your tax return. The peace of mind, I tell you, it's amazing. I can remember having to file for self-employment when I was at college, and colleagues and friends were able to talk about their experiences and pass on advice if they could. But as I look back, I begin to realise that I was almost entirely reliant on the advice from those around me. So in this video, we're going to give you a resource that takes the fear out of the word tax. So let's start right at the beginning and spell this out in some easy to understand steps. How much income can you make before you have to register yourself at Self-Employed in the UK? So if you make over £1,000 in income during the tax year, so that's April 6th to April 5th, then you have to declare that income to HMRC, and that stands for Her Majesty's Revenue and Customs. Just because you've earned over £1,000 doesn't mean you'll pay tax on this amount, but don't worry, we'll get into that a little bit later on. If you've earned over the £1,000 limit, then you will need to register yourself as self-employed. Now you can either do this online, by paper, or use a forum which helps you sign up. And there are some apps that will charge you to sign up for self-employment, and personally I would never use a service like this because it's not particularly that difficult and is also free. You'll need to answer some questions about your business, when you started it, where you're operating the business from, and some additional details like your name. I think you can handle that. One of the scariest parts of tax is the jargon. Those big words that we don't quite understand, and they can make the whole process of approaching tax quite scary. And when you register yourself as self-employed, you will receive a UTR number. Now let's myth bust this straight away. That stands for Unique Tax Reference. Now, when you receive your UTR number, keep it safe. There's nothing worse than trying to find your UTR number in a panic after a year has passed. That's unnecessary stress and you do not need that. So you'll get a letter from HMRC confirming your UTR number, but make sure you make a note of it in your phone too. So let's come up with a fictitious example. I'm going to call him Bobby the bassoonist. Bobby is a student and he doesn't have any full-time or part-time work, but he has been teaching the bassoon on the side. Good for Bobby. He's worked out that he made £12,000 from teaching the bassoon from April 6th to April 5th. Do you remember those are the dates of the tax year? Now the tax-free allowance in the UK is £12,500. That means that Bobby the bassoonist would have to declare his income to HMRC because it's over that £1,000 limit. But he wouldn't have to pay any tax. Well, why? That's because his earnings are below the tax threshold of £12,500. Any income earned beyond the £12,500 is taxed at a rate of 20%. Now, if you're earning the big bucks maybe, and over £50,000, then your tax rate increases proportionally. Maybe your head is spinning from all this tax talk, so let's change the mood for a moment.
A few moments later.
The pandemic not only rocked the arts industry, but many other sectors too. So you may have found yourself applying for the SICE grants. Now, that's some more jargon right there, isn't it? That stands for the Self-Employed Income Support Scheme. IF scheme. You don't need to repay the grant. It is not a loan. The SICE grants are subject to income tax though, so you will need to keep this in mind when completing your tax return. Now, if this comes as a huge surprise because we've all had such a difficult pandemic and you're not sure if you'll be able to repay the tax that is owed, you should let HMRC know as soon as possible. They will be able to help and support you and provide a payment plan to move forward with. If you fail to make payments on time, or if you don't file your self-assessment on time either, it's likely that you will incur penalties. So the best option is always to speak with HMRC and communicate your concerns. Now let me share with you how I prepare for my tax bill. Every time I get paid for a gig, I divide my income into percentages. My tax pot is marked as 25%, and this means every time that I get paid, now every time, 25% of that fee goes into my tax pot. I know it's a bit frustrating, but that's what we have to do as freelancers. Fintech banks like Monzo and Starling allow you to create as many pots as you like, and this could help you avoid any nasty surprises in the future. Now, you don't want to be in a position where you're guessing how much tax you're going to have to pay or having to find the money just after Christmas. You don't have to be a financial genius to get this right, and I save 5% over the tax allowance just to be on the safe side. You may have heard some rumours about claiming for business expenses. Shoes, coats, Netflix even. Well, I'm afraid it doesn't really work like that. Now, you can only claim on things that are relative to you running your business. HMRC states that these expenses need to be wholly and exclusively for your business. Now, if you use something like your mobile phone for business and personal use, then you will need to define what proportion you use the phone for business use. Ever seen someone thoroughly collecting and scanning their receipts? Well, me too. Getting into consistent habits can really help you stay on track and in control of monitoring your business. However, there's one big fat lie when it comes to understanding self-employed business expenses. Now, just because something is tax deductible doesn't mean that you have to buy it. When you leave college, you may find that people are doing everything they can to make sure that they don't earn above the tax-free allowance of £12,500. Now, if you're just about to leave college and you're earning under the tax threshold amount, that's no problem at all. This is exactly how I started my self-employed journey too. But what about those folks that are determined to get their income to show below the threshold? This could come to bite you in the backside down the line. So if you're applying for a mortgage, for example, the bank may be less likely to lend you money as your tax return will show a smaller income. Increasing your expenses may also mean that you make smaller national insurance contributions too. National insurance? Oh, more jargon. Well, it's another form of taxation on self-employed profits. These contributions are paid into a fund from which you may receive some state benefits like the state pension or statutory sick pay. So let's think about this practically. You may not be eligible for the full state pension in the future if you consistently earn under the tax-free allowance. Now, you currently need 35 years of contributing years to receive the full state pension, which equates to £9,350 annually. The reality is that the state pension is the bedrock of many people's financial livelihood in the UK, and it's worth taking the time to research this and make sure you get it right. Setting yourself, business, and some financial goals for the next tax year could be a great way to stay on track. Even just something silly like putting your annual turnover on your fridge might be the motivation that you need to keep you energized and productive out in the freelance world. And you know from my previous YCAT video, Managing Your Finances, that you'll want to think about additional ways to make sure that you're saving also for the long term. Look, it's never too late to adjust the way that you approach preparing for your tax bill, and I hope this video gives you some good tips to try out. My name is Joshua Owen Mills, and you can find me on socials under that name. I look forward hopefully to seeing you there. See you next time. Bye.